Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. It's Tuesday morning, March 30th, 2021. We're this close to having March over. It's been a challenging month for a lot of people. You really had to be on top of your game. You really had to be on top of your position sizing, your risk management. But we've got some opportunities today. Today we're going to talk about, I'll give you a little heads up, we're going to talk about what I call the BBQ stocks that have been pretty strong, and with the pandemic seemingly, you can see the other end of the tunnel right now with good news on the vaccine, economic recovery happening. Barbecues are back on the table. We're going to talk about two beverage stocks and one big box retailer that we're going to call them the barbecue stocks that look really good right now. We're also going to talk about earnings. There's a couple of really popular stocks that have earnings today. We're going to do a review of the market. The SPY ETF held the bid yesterday, which was good to see. We're not really up pre-market right now, but it was good to see that we held the bid. We're going to get into the streaming stocks. There's a lot going on. Whether or not those stocks are bargains right now, a lot of them have pulled back hard. Roku's pulled back hard. Viacom's pulled back hard. Discovery's pulled back hard. And we're also going to get into one online gaming stock that has pulled back pretty hard as well, and whether or not that is a bargain at this price right now, too, with how far it's pulled back from all-time highs. We're going to discuss a historic stock, for lack of a better way of putting it, an old school stock that's had a really good breakout recently. John Bates from our community called it out this week, and it just followed through pretty cleanly. Also have two home builder stocks that we're going to watch that had clean breakouts, are pausing a little bit and setting up the next trade. You don't want to miss those stocks. You want to make sure that you have them in your watch list. So we're going to head over to the charts. We're going to take a look at starting with the SPY, show you what I mean by well bid, talk about how the 10-year Treasury notes rising, the yield rising is affecting tech stocks, which have not participated in the market still maintaining its lofty level. So let's take a look. We're going to head on over. First, we're going to put this up on the screen, take a quick look at that. Excuse me. And then we're going to go right over to taking a look at some charts. So we're going to jump right over to the SPY. And, oh, hold on. I got to share the screen. That always helps. All right. All right. So here we go. So what I mean by the SPY holding the bid, this is really what the biggest part of it is. Normally when a stock pushes up and pulls back, that's a natural function of the market. But when we push up and hold, that is actually showing that the buyers are still under the bid. Now, we did not have heavy volume again. So that means that sellers didn't exactly come back into the market. But on lighter volume, if sellers were around, that would be the time that they'd want to push it down because they're not being met by opposition on the other side in the form of buyers. So we are sniffing. We're kind of right at all-time highs right now in the SPY, which is encouraging. The Qs, however, are not seeing the same kind of rally up to all-time highs. 10-year Treasury yields are holding down tech stocks, and they actually rose again. And you can see the Qs are actually trading lower again. So tech is not the place to be right now, which is going to take us over into a couple of earnings that are actually happening today after the close. Lulu is actually scheduled after the close. Now, normally you can get a pretty good idea of what's going to happen based on the price action heading into earnings. Lulu did not give us that clue, where over the last month, it's really pretty much done nothing. So the way that I trade earnings, I want to see it come out. If I have a head start, I'll hang on to the trade, at least a 10% head start. In this case here, I'm not in a position in Lulu, so I am actually looking for the stock to have earnings come out, and then I'm going to hop on board for the trade for the next couple of weeks. Chewy's a little bit of a different story. Chewy's actually seen quite a bit of selling since the second week of February. So a little bit less inclined to want to be buying Chewy right now. I need to see it get back above 88, 89 before. So we got a little bit of work to do there, probably about $10 to $12 before we get back up there. Both of those stocks are scheduled for earnings after the close. We're going to head on over into what we have called the barbecue stocks. We're going to call it first Pepsi. This was called out by a member of our community as well. Really good long-term breakout, follow through. This is really the kind of trade that we're looking at for one other stock I'm about to mention, where it has a really nice rally, pauses, and then has another push. So Pepsi, TAP, Molson, and Costco, which we called out last week. Hopefully you got some of Costco. Now, Costco actually broke that longer-term downtrend that you see here going all the way back to December, which is great. The challenge now for all three of these stocks is they're a little bit extended, and we're looking for a pause. So this is what separates somebody from an amateur to somebody who's really doing the game planning to act and trade like a pro. You need to now have these stocks in your watch list, expect them to pause for a couple of days, and then make the next run. So keep an eye on the barbecue stocks. We're going to discuss the same kind of idea in two home builder stocks that we've been watching. Pulte Homes, which again had a really clean breakout, a little bit of a pause. So this has to be on your list, as well as DHI. Also a clean breakout and pulling above. So punch through all-time highs, punch through these highs, the breakout level we were watching, waiting for it to pause, and then looking for a new level. So yesterday, pullback, not really that big of a deal. It's holding the bid. So in this case here in DHI, it's actually staying above the 86 level, which is really what we're looking to do. So the stop here, if you happen to get long at 90 or above, the stop has to be on a close below 86. As long as it's above 86, we're going to feel comfortable being long that stock. So getting into the streaming stocks, getting into the ones that everybody's talking about. Again, the stock market is a buzz with whether or not Viacom stock and Discovery stock are buys right now. So we're going to take a look at those. I did some pretty deep analysis on Discovery over the weekend and recently. And personally, I am going to go against the grain a little bit here. There's a lot of downgrades at this point. There's a lot of people still saying that it was way overvalued when it was up at 100. Viacom is up at 100. So we got Discovery down here at 40 and Viacom down at 45. I'm not long right now. I am looking at Viacom over 50. I think that the overshoot to the downside was a little bit too much. If and when we start to get to 50 and I start to see it go well bid and I see good significant volume, over 50 is where I'm going to start building a position, which means you tier into the position. You don't go in everything on the first trade. You want to get feedback from the market. So above 50 is Viacom. Getting into some of the other streaming services, we just looked at Discovery, which had a similar move to the downside. In this one here, I'm actually looking at 45, and you can see the level that I have lined out there. So it's 50 in Viacom, 45 in Discovery is where I'm starting to build positions. Now, again, you'll notice I'm waiting for them to get up to that price. I'm not buying on the way down. I want to see some price action in my favor. I want to see deep pocket smart money saying, okay, this is a bargain down at this spot. If that happens, I'm going to join them. If it doesn't happen, I just simply let it go. That's what real trading is about. You put out your thesis, you put out your argument, and then you say, if this happens, then I'm doing this. If this happens, then I'm doing this. If they continue to go down, that's fine. I'll wait for feedback for the smart money to step in at whatever price seems appropriate. Right now, for me, those are the two prices. We're going to hop on to a couple of other ones, which is Roku, which has actually gotten beat up pretty good. You can see a very consistent, slow grinding downtrend. We thought we were going to be looking at this 318, 320 level to hold. And you can see why. It was resistance. It became support. It became support. We got through that. So above 320 is the level that I'm looking for in Roku. Disney actually got hammered pretty good after it hit all-time highs. I was really excited about buying this pause here after it hit all-time highs. And it's just kind of been melting down there as well. So I want to see it get out of this box. I'm going to leave Disney alone, except for maybe as a day trade until it gets back over 200. So again, some pretty significant levels that I want to see feedback. I want to see price action. I want to see volume. I want to see deep pockets step up and say, okay, now is the time. And we see that. Netflix would be the last one we're going to take a look at here in the streaming side. Absolutely no edge to Netflix at all right now. Not on the daily chart, not on the weekly chart, not on the monthly chart. So out of all of these, that's the right price for Netflix. I'm not even looking for an opportunity in Netflix till we get over that 560 level and stay there for more than a week. So pretty significant there. The other one that we're looking at as far as potentially a bargain coming off of all-time highs is PENN. PENN punched through to 140. Good news. A lot of those kinds of stories about gaming being available in certain places. But it hasn't let up on the offer side. So in other words, the offers keep lowering. I'm actually not looking at this stock until it has one more flush down. So you want to keep an eye on that. I'm looking for it to, and I'm going to use the right word, one more flush to the downside on bigger volume, which is going to make it look like the stock is collapsing. But that's generally the selling after all-time highs here that ends the down move and where it starts to hold the bid and start reversing back to the upside. So I'm looking in the 85 area to start looking for PENN. So how do you keep an eye on these? You make sure you have alert set. Now, because we're looking for it on the way down, we want to set an alert for 86. If it punches down, goes to 86, now we pull the stock up, look for that big massive spike in volume, and then look for the stock to go well bid, which is higher highs and higher lows, first on the daily, then on the weekly, and we'll look for that run back up to 140. So we got the barbecue stocks, we got the streaming stocks, we got the home builder stocks. One other thing I want to talk about, I'm going to go straight into some stocks. We've noticed recently the industrial stocks have been catching a bid. So Lockheed Martin actually breaking out, much bigger level there that broke this longer term downtrend that still looks good. 3M has been strong. Excuse me, 3M, not 2M. 3M broke out of its resistance level. You can see it had a nice push and a pause, another nice push, 3 days of being well bid. Waste Management, Caterpillar, and Honeywell. So we're seeing some stocks that are at new levels, at breakout levels. The other sector that we're watching right now is consumer defensive. Okay, and in this area, we are taking a look at which two we already mentioned, which is Costco, Molson, Procter & Gamble, Target, which is actually at a nice breakout level, and as we just said, Pepsi. Now, the one that I wanted to talk about that was found or shared in our community is steel. Really good call by our community member, John. It actually had a really good breakout above 24. You can see it's trading basically at that level right now. As long as we're above 24, the next move we're looking for is another $8 move out of that. So we're really looking at 30, 32 through that level. So a lot going on right now. Again, I'm still not sizing up yet because the average intraday volume has been a little bit spotty. We've normally been able to, from the day trading perspective, have plenty of opportunity in the afternoon, usually from like that 1:30 to 4 o'clock time. Market's kind of been drifting. It's been a little bit more Peloton time intraday than it has been trading in the afternoons, but that's fine. It's long-term thinking. It's a big part of what we discussed in our weekly coaching call again last night about you're trading for the month. You're not trading for the day. It's really how did you do over the month? You could kind of chicken scratch back and forth for the better part of the month, and then only 2 or 3 trades bring you up to those big numbers that you want for the month. And obviously big numbers are relative for everybody. So be smart with your position sizing right now. Respect your risk. Look at some of the ideas we have, the different levels, set your alerts. Look at those barbecue stocks that have been hot. They're probably going to pause over the next couple of days and get in there with conviction. As long as you respect the downside, the upside will be there for you. You get 1 or 2 trades that follow through, and that's how you get paid at the end of the month. So if you have any questions about this, definitely leave me a comment below the video. If you find this stuff helpful, definitely click down and subscribe. I'd really appreciate it. And give us a thumbs up, too. That lets me know that that's the kind of video that you like as well. So have a great day, everybody. I'll speak to you soon. Take care now.